to trading hour. Well, let's get some market conversation going. Anirudh Garg from Invasset PMS joins us now to discuss market fundamentals. Gentlemen, thank you so much for joining us today. Well, this is again another day where we are seeing good gains in the markets right now. In a market like this, where we've seen such a big surge already, last week was big in terms of moves as well. What kind of sectors do you think stand out, and what kind of approach are you taking here? Because now it could be a lot stock specific, right?
Yeah, first of all, thank you for having me. And a quick disclaimer that if we talk about any stocks or sectors, they are not recommendations to buy and sell. Please consult your advisors before taking any decisions. So I believe every run is very, very unique in terms of where the tailwinds are. Back in the 2000s, it was technology, then it was capital goods, then it was pharmaceuticals and HDFC twins, Bajaj twins, and now I think it's all about capex. So we've been very bullish on the capex sectors, all of them. I don't choose one. It's railways, defense, infrastructure, power. These are the things that India would need in this $4 trillion to $10 trillion run. And I believe the government is doing just the right thing to giving it a push. It is like, I believe it is like creating a shop when a son is born in a family or when a kid is born in the family, rather than, giving a party outright and spending on the revenue expenditure. Capital expenditure would help India a lot in the next 20 years. And this is the right thing to do. Markets are taking it very well. And for me, at Invasset, I think sectors like defense, railways, infrastructure, and power would lead the run. They are not expensive at all for us currently.
Okay. Anirudh, hi. Good to have you with us. So give us some sense on how you're approaching the whole capex economy side of the market, because here stocks are already red hot. I mean, they're running and they have been running for a while. Where do you still find some valuation comfort and yet good growth prospects? How would you play the whole capex and manufacturing theme?
I would not take the name, but I think the whole running thing that they are expensive is more exaggerated than the stock itself. Pardon me for saying that, but I was seeing it one of the best sectors and one of the best stocks in the defense sector when there was this amazing opportunity presented to post the election results where everything was down 20%. Stocks were available at 25 multiple, and a stock which has amazing order book growing at more than 30-35%. When you get these stocks available at multiples below their growth rate, they are very attractive buys, and I still feel there are. So you have to choose and pick between the sectors. You have to choose where the technology transfers can happen. You have to choose which the leaders are. And I think with the leaders, it's, the probability of going wrong would not be that much. So anybody looking into these sectors, I would suggest that look for the leaders, look for the people who have competitive advantages and who can scale it to the next level.
Okay, all right. One space that I wanted to discuss with you is the commodity space and some of the sectors that could benefit or could be impacted because of the commodity moves. What are you suggesting here? Steel space, some of the commodity chemicals, do you think they are also ripe for investments right now?
Okay. So as far as the commodity view goes, it's very simple. It all depends upon where the big daddy, the Fed, is seeing the inflation going. So about 6 months, I think early January, February, the Fed had made it clear that, okay, inflation is not a problem for us anymore, though we are not looking at rate cuts very quickly. So I believe that the markets, they are very, very future looking. They discount the future, and that is what exactly the markets have done. We have seen a huge spurt in commodities as well as the commodity stocks from there, especially the international commodities like metals and all. When it comes to chemicals, I believe we saw a chemical run all the way from 2013 to end 2021. And what happens during this period of time, that in this decade, what has happened is that capacities have built up and the market is not ready to absorb all those capacities. It will be there, will be able to absorb it in the very near future. But I don't think that currently the commodities which have led the market for the last 10 years will continue to lead at that rate. So not very bullish on chemicals, not specialty chemicals also. Yes, you have some very, very special chemicals, which only a couple of players are there in the industry. Yes, they will continue to do well. But yes, overall, in the commodity space, we are more bullish on the metal side, the pure commodity play, rather than the chemical side.
Okay, so that's the view on commodities. So just, Anirudh, sum it up for us in terms of just portfolio allocation. What would be your top overweights as of now? And what are the areas, if at all, that you're avoiding or where you're, looking to book profits?
Okay, so the areas that we're totally avoiding are the ones that have led the markets for the last 10 years. So, all the defensives like FMCG, pharma, IT, and private sector banks, these are the ones that do not have the relative change with them that we focus on a lot. Um, the things that look good to us, I've already mentioned. Capex is one, metals is another. Then a lot of government push is coming on the electric vehicles. You can look at to the beneficiaries in that space, and especially a wonderful premiumization drive is going on throughout the world, where to sum it up, like business class tickets would get sold out sooner than the economy class tickets. So this premiumization drive is going up. So we like something in luxury real estate and airlines. But as the Fed inflation problem is coming down and the commodity prices are bound to increase, only those leaders or those companies which would be able to pass on their input prices to customers without less problem would, I think, lead the way for me.
Okay, all right. Thank you, Anirudh, for joining us today. So those are some market comments and the fundamentals that we've discussed as well. Time for a short break. When we come back, we'll get you more on the markets and discuss some stock-specific moves as well. Stay tuned.